Understanding agricultural and business property reliefs. Inheritance tax is a tax on the value of a person's estate when they die, and it can also apply to certain lifetime transfers of assets. A person who is domiciled in the UK is liable to IHT on their worldwide assets. During a person's lifetime, IHT can apply when a transfer of value is made. This is defined as any disposition that reduces the value of a person's estate. This includes gifts, which can be either potentially exempt or immediately chargeable. Generally, a person's entire estate is subject to IHT. To avoid the breakup of family farms and businesses in order to pay IHT, the government had traditionally allowed reliefs that reduce the impact of IHT on these specific types of assets. Agricultural property relief reduces the IHT owed on the agricultural value of qualifying agricultural property such as farms, farmland, and farm buildings. Business property relief reduces the IHT liability on business assets, such as unlisted shares in a business or an interest in a business. Overview of the reforms. The government is reforming agricultural property relief and business property relief to better target the reliefs, as it is not considered fair or sustainable for a small number of claimants to receive a significant amount of relief. These reforms are intended to affect a minority of estates, with the majority of claims remaining unaffected. The changes are being introduced in two phases, from the 6th of April, 2025 and from the 6th of April, 2026. Changes from the 6th of April, 2025. Agricultural property relief will be extended to land managed under environmental agreements with the UK government, devolved governments, public bodies, local authorities, or relevant approved responsible bodies. Changes from the 6th of April, 2026. A new allowance will be introduced for the combined value of property qualifying for 100% business property relief and 100% agricultural property relief. The first £1 million of combined agricultural and business property will continue to receive 100% relief. Any value above £1 million will receive 50% relief. The rate of business property relief for shares designated as not listed on recognized stock exchanges will be reduced from 100% to 50% in all circumstances. The reforms are expected to affect around 2,000 estates each year from 2026 to 2027, with approximately 500 of these claiming agricultural property relief and 1,000 holding shares designated as not listed. Assets that automatically receive 50% relief will not use up the allowance, and any unused allowance will not be transferable between spouses and civil partners. The £1 million allowance applies to the combined value of property qualifying for 100% business property relief and 100% agricultural property relief. The allowance is applied proportionately across the qualifying property. For example, if an estate has £3 million of agricultural property and £2 million of business property, the allowance will be £600,000 for the agricultural property and £400,000 for the business property. The allowance covers property in the estate at death, lifetime transfers to individuals in the 7 years before death, failed potentially exempt transfers, and chargeable lifetime transfers where there is an immediate lifetime charge, such as when property is transferred into a trust. The allowance does not affect the rate of relief for assets that already qualify for 50% relief. £1 million allowance for trusts. Trustees will have a combined £1 million allowance for qualifying property to which 100% relief applies on each 10-year anniversary charge and exit charge. If a settlor has set up more than one trust before the 30th of October, 2024, each trust will have a £1 million allowance for 100% relief. For trusts set up on or after the 30th of October, 2024, the allowance will be divided between trusts. Rates of relief from the 6th of April, 2026. For the first £1 million, the existing 100% rate of relief will continue. Over £1 million, the 100% rate of relief will be reduced to 50% for the value of qualifying assets over £1 million, except for shares designated as not listed, which get 50% relief and is not included in the £1 million allowance. For example, a £2 million interest in an unquoted company would attract 100% relief on the first £1 million and 50% for anything above the allowance. Lifetime transfers prior to the 6th of April, 2026. The new rules will apply to lifetime transfers on or after the 30th of October, 2024 if the donor dies on or after the 6th of April, 2026. This is to prevent forestalling. For example, a lifetime gift of unquoted shares made on or after the 30th of October, 2024 will be a failed potentially exempt transfer if the donor dies within 7 years. Other factors. Estates will continue to benefit from the nil rate band, residence nil rate band, and other exemptions. Transfers to individuals more than 7 years before death will continue to be outside the scope of inheritance tax. Inheritance tax liabilities can be paid in equal annual installments over 10 years in certain circumstances. To summarize, from the 6th of April, 2026, the full 100% relief from inheritance tax will be restricted to the first £1 million of combined agricultural and business property. Above this amount, landowners will access 50% relief from inheritance tax and will pay inheritance tax at a reduced effective rate up to 20%, rather than the standard 40%. This tax can be paid in installments over 10 years interest-free, rather than immediately, as with other types of inheritance tax. This is on top of all the other spousal exemptions and nil-rate bands that people can access for inheritance tax too. This means that two people with farmland, depending on their circumstances, can pass on up to £3 million without paying any inheritance tax. This is an assumption based on the £1 million limit and nil-rate bands and does not take into consideration the specific circumstances that may affect the tax calculation. Example 1. Farm owned by two people. Two people who jointly own a farm will be able to pass on land and property valued up to £3 million to a child or grandchild tax-free. That is made up of £1 million, where they combine their standard £500,000 tax-free allowances, £325,000 for nil-rate band plus £175,000 for residence nil-rate band, and on top of that, an additional £1 million tax-free allowance each for agricultural property inheritance.